Yeah, being a 140-year-old organization, family run, has an amazing amount of benefits. A lot of autonomy for the business unit leaders to run the businesses that they feel is appropriate to do. So, decision making actually for us is really quick. An organization that maybe you would think is 140 years old. So, wow, we're slow to adopt and slow to move. The challenges that presents is you can start to have silos that prop up because the business unit leaders really have autonomy to make those decisions. One of the areas that's helped us break down that barrier for us and the bank is we created about 3.5 years ago this Premier Services. So the wealth team is accountable for providing the consumer banking solution set to our highest individual and family deposit and banking customers. So we've been able to kind of bridge that gap that our client advisors, which used to be wealth advisors, we've transitioned to client advisors. And when you do a whole goals-based balance sheet approach, you can't do that by ignoring the cashiering and the CDs and the savings. And so now that's under our purview. And so our advisors are compensated that way, and their goals are wrapped around that. So anything consumer and wealth and trust related is handled by the same team. Now, our clients can bank anywhere they want to. We're not saying you have to bank with our premier banking team, which is embedded within the wealth team. But what that doesn't solve, and that's been really fantastic, by the way. Now, we've got a wealth organization aligned with deposits that in the past and in other traditional shops, the motivation is we got to get those deposits over in wealth because they're probably incented to do that. Now we're holistically incented. And we take out the product in valuing that to determine growth of their portfolios. So that's aligned. But what it hasn't necessarily accomplished is this alignment with commercial lending, which we've done a really good job of that over the years. But it's more heavy lifting and building confidence with those commercial lenders to get us involved in those relationships. But what we have transitioned to is a formal process utilizing Salesforce, another technology tool, that we've developed what we call an account review. So all relationship managers across the whole entire organization do 3 account reviews of their most important clients that engages wealth, retirement, treasury management, consumer, and anybody we think is important. That is a review of that account and what are the next best steps. And now we're into year 2.5 into that process that during COVID, we've not been able to roll out a lot of what the next steps are, because a lot of those for us as a relationship bank is we need to get back out in front of our clients. So we're going to have to hold ourselves accountable to those tasks that we populate in Salesforce that will lead to opportunities within wealth, and then also holding our teams accountable to, especially in retirement. We've got a lot of retirement plans that we need to get them banking with us. And that's not intuitive for a fiduciary run organization, but we're getting better at that. So that's provided challenges, but also I think we're making some inroads, but we're going to really have to hold ourselves accountable for execution on that. And that's not natural. We tend to, in the commercial organization, that we got leaders of a relationship, and those leaders are on that relationship till they retire. And then they're the ones that have kind of been the gatekeepers deciding when's that opportunity to introduce wealth and retirement. And those barriers are coming down with this dialogue. So we're excited about that.